where to invest your money in Nigeria if crude oil crashes further. In this video, I want to show you how to plan your finance, how to restructure your portfolio ahead of an expected crude oil crash. Yes, I think crude oil may go down. Right now, it's sitting around $60 per barrel, below our $75 benchmark. Now, in this video, I want to show you what to do when you find out that the price is even crashing further, because as it is right now, the risk of crude oil going down is higher than the potential or upside potential. So in this video, I want to show you where to invest your money, how to think in this type of period, and how to adopt a model that would make sure that you have built a resilient portfolio and rise faster during market dip. For me, I don't always see market dip as a threat to my portfolio. Rather, I always believe that sector rotation would always reveal the best place to put my money. So if I see any uncertainties, or I notice that there's a bleak future coming or future coming, and that may not probably be favorable for at least most of us, it's better you just think like a contrarian trader or contrarian investor by asking yourself who is benefiting from this. So always learn to ask yourself that question. Whenever there's an economic uncertainties or there's an event that is not favorable to a lot of people, ask yourself who is benefiting. That simple question alone would open your eyes to opportunities you can quickly take advantage of. So in this video, I want to show you where to invest your money if crude oil crashes further. So my disclaimer as usual, please note that the ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest in any company stock or any investment opportunities that I'm going to talk about here. And please make sure that you vet my recommendation based on your risk profile. Very, very important. So let's quickly look at the crude oil markets. Now, what is happening right now in the crude oil market? Let's start with the video I had once posted on this channel, which is how to invest if Donald Trump actually wins the election. And in that video, I talked about three T's that Donald Trump is coming with. And that's one, tariff, tension, and tax. So right now, we're seeing the tariff war between US and China. US and China. Now, what is happening between US and China is that for every product exported to the US from China, what happened? Trump is looking to impose tariff, and China is also reciprocating. So there's been like a back and forth between the two countries, even though he has actually exempted certain electronic products, phones, computers, and all that. So now here is where the whole thing is becoming hotter. China is one of the largest net importers of crude oil. So it's not strange that the commodity market is reacting to Trump tariff hike, because at the end of the day, when exporters, manufacturers are being affected because they are not able to sell their products the way they want to, they are going to probably reduce or restructure their operation. And most likely it's going to affect demand for food, demand for energy, because they need energy to power their plants, they need energy to power their factories and all that. So if businesses are not going well for them because tariff is high in the country that they're supposed to sell these inventories to, what happened? They will have to restructure, cut costs and all that. So generally the demand for oil will definitely go down. And OPEC has already projected lower global demand for crude oil because of this tariff war between countries, especially US and China. And that's why you see crude oil price going down. So let's quickly look at the chart of crude oil, then we can take it up from there and my projections. Now, you will see that so far this month, April, crude oil is down by 15%. Haven't opened the section at $71.88. Sorry, opened the section at $71 per barrel. Now, crude oil is sitting around $60.2 per barrel, down by 15%. Last month, we went up a little bit by 1.94. So far, you can see the big candle drop right here. Now, this is a monthly chart. I always use the monthly chart for projections. I would look at the monthly chart to check what the big pictures are like ahead, probably the next 3, 4, 5, 6 months. And if you look at the big picture of crude oil is largely bearish, going by the trend line here that started from a high of $126 per barrel in March 2022. And then you can see how the market had been respecting this trend line. So this started in 2022. So that's almost like 3 years now. From 2022 down, the market had done from $126 down to around $60 right here. Now, you notice again that we broke a major key level this month. You can see here we broke a major key level. The market had been finding support around this region, which is the $66.7 per barrel region. You can see here which the market has been respecting since 2018. You see how the market respected it as a resistance. Right here was a support. It was a support, 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 and then you can see how the market broke that region. So which means most likely we might be heading lower to the next key level, which is $43. So my projection on crude oil market is we'll be heading to $43 if this tariff becomes hotter. If tariff becomes hotter, we might be heading down. If global demand for crude oil is suppressed or pressured, we might be heading down to this region because this has acted as resistance in September 2020 and was a major support in May 2017. So this means my projection for crude oil is largely bearish and we could see the market dump further. So that's my projection right now. So if crude oil dumps further, what are you going to do? Which leads me to this slide here. What exactly should I do? Where should I invest my money if crude oil crashes? So you can see where my projection on the crude oil crash is coming from. It's coming because the crude oil market had broken a major key level right here, which had been respected multiple times. So there's tendency that the market would dump further to $43 per barrel region going forward if the trade war continues between countries and global crude is suppressed. So that is one key area. The only thing that could reverse this trend, for instance, is if Iran is probably brought into the picture where US and Iran goes into war, then most likely we might see the reduction in supply in the market. But then the whole sentiment is largely bearish right now, going by a break of this major trend line that has just sort of key level right here, which is in line with my downtrend line. So crude oil is largely bearish going forward. So that's why I had to quickly share this video on where to invest the money in Nigeria if crude oil crashes further. Now, so I just shared the major projections for crude oil, and let me quickly do a rundown of what I shared here. OPEC has just projected lower crude oil global demand for crude oil, which may drive price lower in weeks or months to come, except the ongoing war or tariff conflicts are resolved. So let's look at the price. So we've just looked at the price chart of crude oil, and what is our verdict? Our verdict is oil is largely bearish, and oil could dump to $43 per barrel. Now, so let's look at the next slide. What is the effect of this crude oil dip? That's another thing you need to be interested in. We've projected the potential or possibility of oil dumping further from 60, where it is right now, to 43 in the next 3. It might not happen tomorrow. I'm not saying this will happen tomorrow. This will happen next week or next month. But most likely in the next 3 to 6 months, 3, 6, or even 1 year, let's say 3 to 12 months, the projection is largely bearish, meaning might see a dump in crude oil price. So what is the effect? Nigerians rely on crude oil as a major source of FX inflow. So which means a dump will likely reduce FX inflow, which may weaken the Naira. Please note the effects. First one is we could see Naira weaken further. I'll talk about this later. We may see Naira weaken further because the country requires more inflow. We need a lot of inflows from FX. From crude oil sales. So if this is pressured, then it means our reserve and CBN will definitely want to manage what it has in the reserve. I'm not sure CBN is ready to spend all the money in its reserve just defending a Naira. So this might be a bit of a risk right now, which means that a reduced FX inflow could weaken the Naira. So there's a possibility that Naira could weaken in the next 6 to 12 months. That's another projection again. Now, the next one is government revenue will decline, hence delaying CAPEX. CAPEX is capital expenditure or infrastructure spending, except CBN raises interest rate. Aside from the FX inflow, another alternative that CBN has been using or government have been using to raise money to finance capital projects is bond, for federal government bond. So the only thing they want to do is to entice investors, either domestic or foreign investors, with higher rates. So if they see that, CBN has increased interest rate again from 27% to 29, 30%, 40%, well, I don't know, because that is going to kill small businesses. Cost of borrowing from the bank is going to be a lot more expensive, because if CBN is bent on funding capital expenditure, is bent on raising money to finance projects, then this might be the only option they have to raise money. So we are noticing another key major projection here. Means CBN may likely increase interest rates. If they need money, number one, this interest rate is going to help to defend the Naira from their own perspective, because when they increase interest rates, it's going to attract foreign portfolio investors. Another thing again is this interest rate might also help to attract a lot of money to a bond market, because if they want to issue bonds, or probably they need, maybe even treasury bill market is going to be affected too, meaning yield or return on treasury bill market will be a lot more attractive. So, which means the moderation that we've seen from December last year will most likely take another U-turn. So, the treasury bill had moderated from a high of like 29% around November, December last year, down to where it is right now, around 19%. So, if CBN is going to increase interest rates, it means that we might see a U-turn on fixed income market, and fixed income yield will be a lot more attractive. So let's take the third one. Increase in landing cost may pressure oil importers. Now, we're still following the trend. We're still following development in order for crude oil deal. Even though CBN, the central bank, the federal government, sorry, had already insisted that this policy has come to stay, but we want to see how it ends. We want to be sure that yes, Dangote refinery is being supplied and it's giving the necessary crude oil it needs to sustain production and also sell at a lower price in Naira. So if that is implemented, then most likely this may not play out. Most importers that are now importing their fuel will most likely not have the power to control price, because right now Dangote will be offering at a much lower price, and they don't have any option than to resort to buying from Dangote. So, but this still depends on Naira for crude oil deal, which I'm still following keenly. But it's good, and I'm happy that the federal government has insisted that this policy has come to stay. But I want to see how it plays out going forward. Now, upstream companies, which are the companies engaged in refining and exporting of crude oil, may notice a drop. So revenue from upstream companies may drop because of the price. But note something, I don't always see a drop in price as the only way to project a lower revenue for upstream companies, because some of these upstream companies tends to increase quantity. They tend to invest in their output production, increase output, increase quota, so that they can use it to knock off the drop in price. So sometimes higher crude production could help to offset the lower price, and then eventually they might report higher revenue. I saw this play out on Seplat last year, last 2 years, or last 3 years. So, that's why I try to be very careful when I'm projecting the price of the revenue of most upstream companies, because some of them might actually offset that price dip with increased revenue or increased output. I mean, and if higher output is very high, then you might probably give them more money at the end of the year. So this for me is just 50-50. Drop in price of crude may most likely not push their revenue lower if they are able to report higher higher crude production at the end of the day. So now, what's the effect on NGS? Now, we've also noticed a dip. NGS have been bearish since February. If you look at the NGS, that's the NSE All Share Index right here. So you will see that from February to date, you can see here from 14th of February, the NGS reached a high of 109 basis points, and the market has lost since then down to this period. Now, the price of oil is also largely tied to, has a lot of influence on the direction of Nigerian stock market. So crude oil price may be negative for Nigerian stock market because it tends to project rising risk premium for investors or FPI who are already invested. So please note this part. Crude oil dip may most likely be negative because what? It tends to project rising risk premium. Let me show you why I said this. Look at this headline here on this day. We see JP Morgan decline in oil price will push Nigeria's current account balance into deficit. And here again, we have JP Morgan warns investor of rising risk for Nigeria as oil price fall and Trump's tariff unsettle market. So you can see that whenever investors are pricing higher risk, it tends to drive the market lower because foreign investors are already invested, will start offloading their stocks, selling their stocks just to move their money back because of possibility of devaluations and all that. So, like I said, this could lead to sell-off or exodus of funds, except CBN entice them with higher rates. So that is part of the reason we might have seen this dip so far. You see, investors have been selling. In short, one of the things I also noticed is that on a weekly basis, the volume of stock traded has been dropping. The volume of stock. So investors have already seen this ahead. They are pricing in risk premium. They are pricing in higher risk in Nigeria because of declining oil. So that's why this market is largely bearish. I had a section with them just last Sunday, and I shared my idea, I shared my projection, and I shared the region that we might likely call it a bull. And at this moment, the market is largely bearish. But then, if the market is bearish, it doesn't mean you should sell off a stock and run away or you should panic. Like I always say, sector investing always win in the stock market. There will always be company that is benefiting from current economic situation. That's why that's what I want to show you right now in this video, where to invest your money if crude oil crashes further. So I've shared my take on the crude oil market. I've shared the effect on crude oil. Now let's move to opportunities in the market. Where are the opportunities in the market right now? So we start. Remember the first thing I said right here, reduce FX inflow may weaken the Naira. Reduce FX inflow may weaken the Naira. So here's opportunity. Higher FX rate is bullish for banks, investment and insurance stock with diversified revenue beyond the Naira. So any bank, any investment firm or listed firm or insurance company that has a lot of FX exposure or they have FX assets, they are going to benefit from this higher FX, from this exchange rate. Why? Because when rates goes up, they're going to make more money from exchange rate gain or unrealized gain. So meaning by the time they revalue their assets or by the time they translate the foreign currency holding into Naira, the value, Naira equivalent would have been a lot more higher. And that's going to be very positive for their book. So this is one thing you need to watch out for. Now, I also share all this, I think some years back in my community. Now, a lot of banking stocks, a lot of investment stocks, a lot of most importantly, investment and insurance stocks are down right now. A lot of investment and insurance stocks are down, and I'm very excited in the market because of this. Because it is only when the market dips that you can find opportunity. So there are few investment and insurance stocks that I'm tracking, that I'm watching right now. The moment they give me that go ahead, the moment they turn around, the moment they rise above my major point where I'm watching, the moment they give me the perfect setup, which I teach in my ETC section, we will go in immediately. So this is where you should look out for. Banks make a lot of money when exchange rate is high because banks have a lot of foreign currency exposure. Imagine banks that have a lot of branches outside Nigeria. When rates go up, by the time they convert their profits in these foreign countries into Naira, what happens? It becomes a lot more higher. That's why you see some banks are being strategic. Some of them are investing in acquisition of foreign subsidiaries because they want to diversify their revenue, because they want to hedge against Naira depreciation. So that's one opportunity you should watch out for right now. So if you're invested in the stock market, this is where you should be paying attention to right now. But in this sector, there are specific companies that will most likely be making most of the money. This is what I show them in my ETC program and also in my private community. So I have a lot of stock that I'm watching. Now, when you join our community, it is not compulsory. I want to state this. It is not compulsory that you must buy stock from day one. Sometimes joining the community can give you the knowledge to save you from losing. So it's not about, oh, I joined today, what should I buy today? No, it's when you join the community, you learn the knowledge to, one, reduce your losses. Maybe the knowledge you would have gained um in our last webinar would have helped you from losing. Maybe you plan to buy a stock that was already high. Maybe you plan to buy a stock that is already leading. Maybe you plan to invest your money in a company that was not even going to benefit from the current economic climate. Maybe because you like the company and you want to invest. But when you join our section, we will take you away from those loss-making sector, those sectors that will not benefit from the economy. That's an advantage because that money that is sitting in your account would have been a loss. But because you joined our community, we shared knowledge with you and you didn't invest in them. So we saved you from losing money. So it's not every time that you join a community that you want to buy. Sometimes when you join the community, you hold on, you follow them. We have a pattern of investing. We have a pattern of recommending stock. Now, when stocks are down, it gives an opportunity to recommend stocks for both short and long term in the market. So note this part. Second part, CBN may hike rates. CBN may hike rates to counter rising inflation. Nigerian inflation has just inched higher, according to reports that was shared, I think, just yesterday. Let me see if I can find that news. There's a news on Nigerian inflation that came out recently. Yes, Nigerian inflation rate rise to 24.3 in March. Can you see Nigerian inflation jumped to 24.3? You can Tinubu's hardship. Nigerian inflation was in March 24.3. So most likely, if you look at this now, coupled with the expected increase in interest exchange rates, CBN may hike rates. So possibility that CBN may want to tighten monetary policy is there. Remember, this is just my assumption. That's why I use may. I didn't say will. So CBN may hike interest rates to counter rising inflation and higher FX, which is also positive for fixed income investors. So if you're someone that is investing in treasury bill bond, this might be your time again. Your time to shine might actually come again because yield in the fixed income market might not go higher, might become a lot more positive, attractive. Why is CBN doing that? Because he wants to keep foreign portfolio investors and also he wants to counter inflation according to their own definition. So meaning that you might see treasury bill. Remember the last yield they left the 90 days and 180 days. They increased 180 days and 90 days stop rate, but the one for 365 was almost at 19%, but the one for 190 and 180 days. So why is CBN increasing the stop rate on this shorter tenor bills? Well, I don't know why they have it, but I think if you look at economic events and the way things are playing, most likely CBN might want to tighten monetary policy again. So, which means treasury bill, bonds, and if any company is coming to the market to issue commercial paper, finance cost is going to be high. Yield on commercial paper will also be high. So generally, I expect the fixed income market to be a lot more attractive. I expect yield on money market instrument to pick up again in response to this. And remember again, finance costs that makes a lot of money. Finance cost, finance company that invest in treasury bill and bond would also benefit. And these are companies like banking, in the banking sector, investment and insurance, because banking stocks, they invest in this. Investment stocks, the same thing, insurance stocks. So they have a lot of exposure in the fixed income market. So meaning that a hike in interest rate will also be bullish for banking, investment, and insurance. So you can see how banking, investment, and insurance will most likely benefit from opportunities in one event and also another event. Higher exchange rates as well as higher interest rates are largely bullish for banking, investment, and insurance company. Now, the other one, higher FX is also bullish for export processing companies. Export processing companies, there are companies that rely on exports to generate a lot of revenue. So when exchange rate is high, by the time they convert their USD sales, USD revenue into Naira, what happens? They're going to make a lot of money from this sales. So note those kind of companies again, especially the ones that are into export processing. So note this company. I shared some in the community. I think there were two of them I recommended, one in December, one in January, and they are up by an average of 50 to 60% so far. And I'm still holding them because one, I believe that the higher exchange rates would definitely benefit their exports, positive for their export revenue, and that would also help to drive their bottom line profit this year. And finally, no matter what happens in the economy, sectors that record increased spending, increased consumer spending despite rising costs from FX. Example, telcos. The telcos are in a position to benefit right now. Telcos are in a position to benefit. A lot of us are complaining data is expensive, data is expensive, data is expensive. Jokingly, you even see some joking with using it as kit, whatever. But if you are smart in Nigeria, you will note that this is an opportunity in the telecom sector right now. There's an opportunity in the telecom sector right now because an increase in data rates will definitely be positive for their revenue from call and also their SMS. In short, call, SMS, and data. So I expect the telcos to report higher revenue this year. So this is despite the FX increase we are seeing because a lot of these telcos have invested, a lot of these telcos have tried to diversify from their foreign currency loan. So that is most likely going to be positive for them this year. So these are the places where you can find opportunities in the market right now. Well, first one is banking, finance, insurance, export processing, and telco. If you build your portfolio around this company, you're going to make a lot of money from Nigeria. You're going to make a lot from the stock market this year. So if you're looking for where to invest right now, just share the opportunities. Number one, there's opportunity in the banking sector, investment, and consumer. So if you are a dividend investor, you have a place where you can buy your stock and collect good dividends this year. But note, when you're buying your banking stocks, don't buy random stocks. There are selected stocks that will most likely do well. From what I've seen, that I've done from my research, there's selected stocks that will most likely do well. I shared two of them in our last webinar. And if you join our community, you can go to glowfollow.com/webinar/NGS, and then you will watch the video on our last webinar. I always upload the video of our monthly webinar. For those that didn't attend, for those that don't have time to join us, they can watch a replay and catch up with whatever I have discussed and insights that I've shared so far. And then we have the export processing companies that benefit from export revenue. Higher FX will also boost their revenue. And then we have the telcos. The telcos data hike, whether FX is high or whatever, many of us are spending a lot of money on data right now. Data cost is a lot more higher. Are you invested in telcos? This is it right here. So these are more opportunities I share in Glowfollow community. So if you want to catch the hottest stocks benefiting from all these trends, from this trend right now at the bottom, go to glowfollow.com/subscribe and pick a plan that works for you. I will be waiting for you in the community to take your question. And remember, if you have any question, we have a new platform called ask.glowfollow.com. Ask.glowfollow.com is where you can ask all your questions and you get feedback. I designed this for beginners who know nothing about stocks or money market, and then they are looking for answer. They have basic questions, they need clarifications and all that. So this is where you should go to register. Is free. It's 100% free for everybody, whether you're a member or non member. Ask your questions. I'll be right here waiting for feedback waiting for your I'll be right here waiting to give you feedback on all your questions and issues right here. So I hope you got value from this section, and I hope this is useful for you to align your portfolio going forward right now. If oil price drops, I'm sure you know what to do right now. You know where to invest your money. This is the first time you're watching my channel. Kindly hit the subscription button and turn on the notification bell right now. Thank you.